Nicholas, there obviously the finance minister referring to the strong foreign inflows impacting the exchange rate, specifically the South African exchange rate, and holding the rand at very high levels. Although we've got a retracement on the currency taking place in the moment in sympathy with the euro. We're sitting at 762 just a short while ago on the dollar rand. Your views on the foreign momentum that is ultimately boosting the local market?
Well, I think South Africa, if we take it back quite a few years, is a very closed economy, and what we've done is we've really relaxed exchange controls. We've become incredibly open. That's been a very positive thing, I think. I mean, I don't completely disagree with the minister's point of view. I think he's got a good point from that perspective. But we need to look at the bigger picture. I think it's incredibly important to keep our economy very much open, specifically from a foreign perspective, where money is very easy to flow into the country and very easy to flow out of the country. What's happening at the moment with the rand is that we're actually seeing a very strong dollar because the euro is weak. So that's why the rand has weakened against the dollar, because of a stronger dollar. We're very much stronger against the euro because the euro is weak at the moment. So I think to have, from a foreigner's point of view, to have this idea of openness, I think is incredibly important.
We don't want to go the Brazilian route in terms of a foreign tax, a hot tax on investment into the country. It hasn't had any impact on the Brazilian real. It hasn't helped weaken the currency at all. In
fact, what's interesting in South Africa, the rand is one of the most highly traded emerging markets in the world at the moment. I mean, a lot of rands go through that market on a daily basis. I think the point that he wants to get to is a little bit more control with regards to what kind of money is flowing in. I think we're very happy to get in foreign direct investment, which tend to be more medium to longer term. But what he's looking at is the portfolio investment. Foreigners buying on our stock exchange bonds, shares, or just putting cash into the banks here and then taking it out immediately if something happens. I think that's what he wants to control. I would really suggest not to do that at the moment. I think it's very important to leave the exchange controls as they are, as open as possible.
Nick, what do you make of the turmoil unfolding on markets across the globe at the moment?
Yeah, it's amazing what happens in 2 weeks. I was here 2 weeks ago, everything was bright and happy, and all of a sudden everyone's sad because Greece has now really become an issue. I mean, it's been on everyone's radar screen for the past month and a half, and now it's certainly a knitting needle point at the moment. We're very concerned about it, everybody is currently, and that's having a negative sentiment against the market. So it was a good excuse to really pull these markets down. I mean, they were up for the last 4 months.
Are you on the right side of the market? Because you're looking relatively upbeat. You don't look stressed at this stage.
I'm not stressed because the idea is that these markets needed to let off some steam. I think the markets in the short term are just built on pure sentiment. 2 weeks time we could all be positive again, and the markets are up at the moment. I think I'm more realistic about that in the sense that I'm a vanilla stockbroker. We don't really deal in derivatives and so on. We buy long and we invest money at the end of the day. So pullbacks like this are really beneficial because we feel that if we still concentrate on our core holdings and our really good blue chip stocks, you're going to get opportunities. I mean, you've got stocks that are down 15-16% within a 2 week period, and you've got all this new money that came in the last 4 months. I mean, this is an absolute great opportunity. I don't see this as being another major crash. I don't see us dropping 20% from where we are now. All that said, it does depend on how serious this Greece issue becomes. Is there going to be a contagion effect? That is the big unanswered question at the moment. Greece has been bailed out. Will another country have to be bailed out? Will we have to bail out Portugal? Will we have to bail out Spain? What's going to happen to Britain? So all that uncertainty leads to negativity, negative sentiment. Markets pull back. Foreigners take money outside South Africa. You've got the rand that goes back up to R7.60.
Are you expecting a big sell-off on the local market?
I'm not actually. I think we've seen a good 6-7%. Things seem to be stabilizing. The JSE was not down that much yesterday. It's not down that much today. US markets are not going down 1-3% at all. You've got some solid companies like Bhiliton that are actually only slightly down, seem to be finding their feet at the moment. So as long as we've got the Bhilitons, the Anglo-Americans, the South African breweries and the MTNs hovering around at their support levels currently, it's going to lend support to our local markets, and we're not going to see the JSE hectically down. So my point of view is to start nibbling at the market at these kind of low levels with the idea of, yes, it could get worse, but no one really knows at the end of the day. But I think we're getting close to a very good buying opportunity on these world markets.
JD Group out with a trading statement today.
Had a brief look.
They're expecting to return to profit in the 6 months
to February. I read it here. I'm trying to still understand it. JD Group.
It's a little obscure, isn't it?
A little bit. It's not really like how much money did we make or how much money did we lose. But I'll have another look at it when I get a chance tomorrow. But generally speaking,
furniture retailers. What is your view in total?
I mean, my view was basically anti-retailers, and that was proved wrong. I mean, you've seen amazing growth out of Mr. Price and Massmart. Granted, they weren't really credit retailers per se, where JD Group, has suffered a hell of a lot in the past 3 years, and it's certainly got a long road to recovery. So I'm still a little bit jaundiced against these companies. I'm not really interested in them. You know, the Massmarts and Mr. Prices that I did hold have done very well, and I'm very happy with them. But I certainly feel that the retailing sector, as well as the financial sector of the South African economy, is getting incredibly expensive on a per share basis. So if you do get these pullbacks, it's potential that there could be opportunities there. But I've always been a resource bull, so my opportunities are your major resource businesses and a few of your multinational corporations in South Africa, such as the MTNs and so on.
I know there's been a lot of news flow out today on the international front. I'm not sure if you saw the interim management statement, well, the first quarter management statement rather, out from Mondi. That stock today at 49 Rand, it's down 1.5%. They've spent a lot of time refinancing, restructuring. Is this a go for you now?
Hope they'll make profit one day. I've never been excited about paper. Sappi and Mondi have really recovered in share prices, but we must admit it's off incredibly low levels. They've pumped a lot more money into their structures at the moment, shut down a lot of mills that weren't profitable. Briefly having a look at it, seems things are turning a little bit in Europe at the moment. Things seem to be brighter, but it's just not there yet. I wouldn't be putting my money into paper and pulp at the moment.
You mentioned that BHP Bhiliton, relative to the market, was holding its own at the moment after a significant sell-off when the market was scared over the Australian resource tax coming in to tax resource profits at some 40%. You are a BHP Bhiliton fan.
Yeah, I mean, that was a political risk that one needs to take into account. You know, I think we also need to understand and look at the tax a little bit more directly, in the sense that, from our point of view, it's more of a politically driven thing at the moment. They've got an election coming up. The general view of the analysts is that it's a law that will probably be passed, but should be watered down in Parliament. The bill's only going to be probably go through by 2012. So it will affect BHP Bhiliton. But if we have a look at Bhiliton or all the other mines that operate in Australia, Bhiliton is the least affected. So we feel that, yes, it will have a meaningful impact, but the meaningful impact is not going to be as stressful as the market views it. So we did see a pullback on BHP Bhiliton of 16%, where its brother Anglo's is down about 12-13%. So that 4% differential is the unknown risk involved in this tax. So I think it's already priced into the share, and we're starting to see the share price find a grounding level of about 213 Rand, 215 Rand. So it's finding its feet at the moment. It's had the big hiccup as, the tax is heavy, it's going to be disastrous, let's sell, and pulled all the way back. Now it's starting to find its feet at the moment, and that's actually lending support to the JSE. That's why we're not dropping that much, because Bhiliton has stopped its drop currently. Obviously, Bhiliton making up about 20% of the JSE top 40.
You've made the statement that you are a resource man. Let's look at Nedbank, recently out with that first quarter trading update. Today, at the top of the top 40, we're up just almost 2 3/4% on Nedbank at 133 Rand 50. Having recently spoken to Patrice Rousseau from Sanlam Investment Management, this is the ugly sister of the big banks, and perhaps time to look at the likes of a Nedbank?
No.
I was pushing my luck on that front.
What do I buy in the banking sector? Look, I still think Standard Bank would be my top pick in the top 4 banks. If you're looking at Standard Bank, First Rand, Absa and Nedbank. Nedbank has been the ugly duckling, and things do seem to be turning around there. But still, if I've got that on my accounts, I'm not really invested in them at all. I still think banking stocks in general in South Africa have got a long way to go. I do like the Ables and Capitec, and I know Capitec especially has been on everyone's lips lately. They work on Capitec.
It's run.
I still think there's more left in it. I mean, maybe at 100 Rand still a bit expensive, but I certainly think Capitec and Able, because they work on completely different models, I think they've got a better upside potential, and for me offer better investment opportunities than a Nedbank and Absa. Or
so you would still be pulling into Capitec at these levels?
I wouldn't be pulling into Capitec at these levels. I'd be pulling into Able at these levels. They've moved from 36 down to about 33, and they've got a really great dividend yield as well, which is quite enticing. I think they're about 4.5-5% at the moment. So if I can get Able at 33 or down to 30, I'm quite happy. Capitec, if I can get closer to the 90 Rand level, I think that's a worthwhile buy. But I'm still not interested in your major banks at the moment. I don't have them on the portfolio.
Did you have a chance to peruse Coronation?
Goodness, no, I haven't. I must be honest.
We won't go there. Coronation's interim diluted headline earnings per share rose 221%. That's to 64.8 cents, largely due to equity flows in the market. Nick, just very quickly, where are we going from here in your view? I was saying to Riet earlier, it's going to be a volatile ride. Do we need to hold on to our hats over the next couple of weeks?
No, I don't think so. I think, the markets have given up a lot of what they made this year. We needed a little bit of steam being let off this market. We're down about 6 6.5%, I think, from the high. I think we still got maybe 1 or 2 percentage points left, but not too much more than that. So I would actually be preparing myself, judging where my levels would be to buy, and start putting those orders in the market, because I think you're going to get some really great deals going forward. Rather use this as an opportunity than another head for the hill scenario.